Bill Ackman just went Magnificent Seven shopping. He opened a brand new position in Meta worth over $1.7 billion. He increased Amazon by 65%. He boosted Brookfield by 50%. Then he dumped Chipotle and Hilton entirely, $15.5 billion. 11 stocks. And the most concentrated billionaire portfolio on the street just made its loudest move in years. Let's start with the headline move. Ackman bought 2.67 million shares of Meta Platforms, a brand new position worth roughly $1.7 billion. That instantly makes Meta his fifth largest holding at over 11% of the entire fund. In Pershing Square's investor presentation, Ackman said, and this is a direct quote from the filing, "We believe Meta's current share price underappreciates the company's long-term upside potential from AI and represents a deeply discounted valuation for one of the world's greatest businesses." He called Meta a leader in digital advertising and one of the clearest beneficiaries of AI integration. This is notable because while Dalio was cutting Meta by 46% and Druckenmiller was dumping his entire position, Ackman was loading the truck. At 22 times forward earnings with 3.5 billion daily users and 30% revenue growth, Ackman clearly thinks the AI capex fear is overblown and the market is handing him a gift. Next, Amazon. Ackman increased his position by 65% in a single quarter. Amazon is now his third largest holding at over 14% of the portfolio. This lines up with everything we've covered on this channel: the $200 billion capex plan, the OpenAI partnership, and AWS as the backbone of the AI revolution. Ackman is clearly betting on the same thesis. Then there's Brookfield Corporation, his largest holding at 18%. He boosted it by nearly 50%. Brookfield is a global alternative asset manager, real estate, infrastructure, private equity, and renewable energy. It's the kind of boring, compounding, capital-light business that Ackman loves. And in a world where interest rates are stabilizing and infrastructure spending is accelerating, Brookfield is positioned to capture massive fee-related earnings growth. Now the exits. Because what a billionaire sells tells you as much as what he buys. Ackman fully exited Chipotle. Gone. He also fully exited Hilton. Both were long-standing positions that made him enormous returns over the years. The stated reason for Hilton was valuation. He believed the stock had reached fair value and the risk-reward no longer justified the position. He also trimmed Alphabet for the second straight quarter, reducing Google by about 2.5%. Combined with his new Meta position, the signal is clear. Ackman is rotating within big tech away from Google's ad dominance and toward Meta's AI-powered advertising engine. And Uber, his largest position for years, got a tiny trim, less than 0.5%, barely a rebalance. He still holds it as his second biggest position at nearly 16%. Uber remains his highest conviction, long-duration platform bet. So what's the pattern here? Because Ackman doesn't make random moves. Every trade is a thesis. The pattern is AI monetization. Not AI hype, not AI infrastructure, AI monetization. Meta monetizes AI through advertising. 3.5 billion users. AI-optimized ad targeting. 30% revenue growth. Amazon monetizes AI through cloud. AWS powering OpenAI. Enterprise AI adoption accelerating. Brookfield monetizes the physical infrastructure that AI runs on. Data centers, power grids, renewable energy. Ackman isn't buying the chip makers. He isn't buying the model builders. He's buying the companies that turn AI into cash flow. That's the distinction, and it's a smart one. So what's the chaos capital take? Bill Ackman runs the most concentrated billionaire portfolio on the street. 11 stocks, $15.5 billion. When he makes a move, it's not a hedge. It's a conviction bet. The conviction right now is clear. AI monetization over AI hype, platform businesses over chip suppliers. And Meta at 22 times earnings is the boldest call in the portfolio. Whether you follow him or not, the signal is worth studying. Ackman has turned a $270,000 initial investment into a $20 billion net worth. The man knows how to allocate capital. Billionaire 13Fs are 45 days late, but the thesis doesn't expire. The question is whether you see what Ackman sees, or whether you wait until the market prices it in. The capital markets are chaos. Embrace it, and I'll see you in the next video.